Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in today's video is going to be a little bit of fun video. What we want to do is go over SCHD, one of the most popular dividend ETFs out there. We've talked about this before. We talked about the, I think it was 10 halal stocks that are within that ETF that were doing really good at the time. That was quite some time ago. They've now rebalanced it again, which means they got rid of some of the stocks that were on there. They've added new ones, and what we want to do is look at this ETF. But before we do that, as always, if you can like the video, that really helps because it takes a lot of time to put these videos together. Subscribe to the channel. There's a lot of you that are actually watching the videos, but you're not actually subscribers, so it would be really helpful and wonderful to have you as part of our community. So please join us. And if you have not joined us on the Patreon account, where you get access to all the buys and sells that I'm making regularly, as well as all the brothers and sisters that are on that list, on that Discord, that's sharing good practices on daily basis. You've got access to the Sharia compliant investing ebook and all the different dividend trackers and so on. And it really helps the channel, inshallah. Before we get to the video, I want to talk about something important, and that is just to look at the S&P 500. And right now we're still up in the air, basically when it comes to the fear and greed, still up in the basically in the greed side of things. Now recently we came down to up to 62, I think, but now it's come back up again. So just to be mindful, in the next few months we might see a dip in the market, and I hope that happens, because one thing that's going to happen in the next couple of weeks, starting this week, is the earnings report. So we're in that season again, and you know what happens when that happens. So a lot of these companies will report their earnings, might not do well, and then of course they will have an impact on the sectors. So there are certain companies they watch, and then when these companies go down, they kind of think the rest of the market will come down with these stocks, and of course for that reason it gives us an opportunity to add to our portfolios great companies at the discounted prices. But right now everything seems very expensive, so I wouldn't be surprised. So be mindful in the next few weeks. That's why I'm not adding any money this week. I'm not timing the market, but I just right now everything seems expensive, so I'm not going to add any money this week. I'm just going to sit back. But if I see an opportunity, of course I'll take use the opportunity to buy great companies. But I have not seen anything really very, very cheap at the moment. Even the companies that I own, a lot of them, apart from the UK companies, the US stocks seem really overvalued, and UK companies, the growth is not there. So I don't have that basically need to buy more of these companies, especially adding a lot of money into these companies, inshallah. But I'll let you know, as always. Of course, I share everything I'm doing with you guys. I've been transparent with you guys about everything, and I will continue to do that, inshallah, in the near future. Now let's talk about this company SCHD, and this ETF is very, very popular ETF, and it's been around for quite some time, and a lot of investors are now looking at this ETF instead of buying individual stocks. I promise you, if I was buying individual, like if this was Sharia compliant, I'll probably put a lot of money into this. I'll probably do at least 50%, and I hope whoever's out there, when it's Wahid or any of these companies or even iShares, can come up with an ETF that is actually has a decent dividend as well as the growth side of it, something similar to this that will really help the community. Because right now there's not that many out there, and the ones that are there is about 1% dividend yield, which is not great. I can't live off 1%. So this one, I'll give you more information about it in a second, is very, very popular with dividend investors. A lot of people actually stopped buying individual stocks and start putting a lot of money into this, because if you can get 3% plus on this, and they're going to do all the hard work for you, and the expense ratio is very, very low, that's all you want. That's all you want from ETFs. But remember, this is not Sharia compliant, so we're only going to look at 7 companies that are within this ETF, especially after the rebalance. So how does it actually work? Things they're looking for, so their methodologies is basically they have to all be US based and no REITs. So there's no REITs. All the companies are US based. 10-year plus of dividend payouts, so they have been paying dividends 10 plus years. They don't have to necessarily increase it, they've been just paying that. Okay, in top 50 of the dividend yield, so 50% of the dividend yield as well, in top 50%. So after they've done it, research, basically they find the top 50 of the dividend yield, That's what they're taking. Top 100 selected based on a score, and that score takes into consideration things like the free cash flow to debt. So they're looking for companies, of course, that meet that criteria. They're looking for companies that meet, for example, return on invested, return on equity. They're looking for dividend yield, and they're looking for the 5-year dividend growth rate, which is important as well. So there are quite a few factors into that they take into consideration when selecting these companies. And basically this is automatically selected, so it's a very passive. There's no in and out. They're not selling in or whatever. They rebalance it once every, I can't remember, once a year or twice a year or however many. So what we want to now do is look at the 7 companies. First, I'm gonna show you the 7 companies that I want to share with you guys. Then I will show you the companies they took out and companies they've included, which is very, very interesting, because I couldn't understand why they took out certain companies. Maybe I could, but I'll show you exactly in a second. But first, what we're going to do is we're going to look at the 7 companies that are Sharia compliant within this ETF, inshallah. And always do your research. Please make sure that you are, of course, doing your due diligence before you start investing in any of these companies. Right, so the first company we're going to look at is Texas Instrument. So this is one of the companies that I think it's been there before. Okay, I'll check at the end. So it has a market cap of $153 billion. It has a wide economic $170 per share right now. Dividend yield above 3%, which is quite nice. The payout ratio is quite high, 71%. Latest increase almost 5%. 5-year growth rate of 14%. 20 years of increase in that dividend. So that's probably, it meets the criteria. So 20 years of paying and increasing that dividend. Annual payout $5.20. Safety right now is 80%, which is quite good. Profit margin almost at 37%. Return on equity of 41%, and return on invested capital 25%, which is good. So they have it meets the criteria for return on equity. I don't know exactly what they're looking for the number, but they look for return on equity. Free cash flow right now $1.3 billion. Total return the last 10 years about 16%. Growth estimate for the next year is about 28%, and then after that 10% every single year. 15% premium right now, $156 per share is where they think the price should be according to Morningstar. I'll share with you guys also the Sharia compliance side of things as well, to make sure you know exactly if these companies are Sharia compliant or not. And as always, please like the video if you haven't already. UPS is the next one, 128 billion market cap, wide economic, about $150 per share right now. Dividend yield over 4%, which is really huge for this company. Payout ratio is 74%. Again, very, very high. I don't like that, but I'm hopeful that in the next few years that can come back down. Latest increase was only 0.6, 5-year growth rate of 12%. 14 years of paying that dividend and increasing that dividend. $6.52 is what you will get. 69% safety. Profit margin right now is 7%. Return on equity 36%. Return on invested capital of 20%. $5 billion of free cash flow. 7% total return in the last 10 years. Growth estimate for the next year basically is about 17%. 10% after that. Fairly value right now $158 per share is where the price is should be. Right now is about $150 per share. Next one is we're looking at is Home Depot, another company that I own. 354 billion market cap, so it's a huge company. Wide economic moat, $362 per share. Dividend yield 2.5%. Payout ratio 56%, which is nice. Latest increase 7.7%. 5-year growth rate of 14%, which is nice. 15 years of increase in that dividend. $9 is what you will get. Safety 87%. Profit margin about 10%. Return on equity 1,162. Return on invested capital of 39%. Almost to $18 billion of free cash flow. 18% growth total return in the last 10 years. 7% growth estimate this next year, and then after that 4% after that. 36% premium according to Morningstar. $263 per share is where they think the price should be. Next one is AbbVie, 97 billion dollars of market cap, wide economic mode. Price right now $169 per share. Dividend yield over 3%, which is nice. Payout ratio, so far a lot of these companies are more than 2.5%, which is quite nice. 54%, so they have room to increase that. Latest increase was almost 5%. 9% in the last 10 years. 52 years of increasing. Remember, this is the and spin-off from Abbott Laboratories, so they actually inherited that, but they are a new company. Annually they will pay you $6.20. Safety 80%, profit margin almost 9%, return on equity 35%, return on invested capital of 24%, $22 billion of free cash flow right now, 15% total return in the last 10 years. Growth estimate next year about 9%. Growth estimate for the following 5 years is 4%. Fairly value right now $168 per share is where they think the price should be. Next one is EOG Resources, oil company. $177 billion market cap, narrow economic moat, $135 per share. Dividend yield of 2.7. Latest increase was 29%, and the latest payout ratio of 29%. Latest increase was 10%, and the 5-year growth rate of 33%, which is huge. But they have only been paying this dividend for about 6 years. So the fact that they've actually included this is interesting, because they're looking for 10 years. Remember, 10 plus years of dividend payouts, but they have been paying that, but they have only been increasing that dividend for the last 6 years. So they must have been paying way more than that. Let me just actually in fact check, and there you have it. So 36 without reduction, so 32 years of basically paying that dividend. Okay, however, in terms of increasing the dividend is basically only 6 years, which is absolutely fine. So it meets the criteria basically. $3.64 is what you get. Latest safety was 82%, profit margin 32%, return on equity 28%, return on invested capital 25%. Really solid. $5 billion of free cash flow. Total return the last 10 years 5%. Again, total return for these companies, oil companies, is not great, of course, in the last 10 years. Growth estimate for the next year is 6%, then about -1% after that. 15% premium right now, $117 per share, where they think the price should be. 2 more to go, and the next one is Kimberly-Clark. Is one of the consumer staples companies out there. 42 billion market cap, wide economic moat, $126 per share, almost a 4% in terms of dividend yield, but 72% payout ratio, which is absolutely huge. Again, latest increase was 3.4%, 5-year growth rate of 3%. Again, very low. Dividend streak of 51 years, so they are dividend king. Annual payout $4.88. 88% safety, profit margin about 8%, return on equity 241%, return on invested capital of 29%, $2.7 billion of free cash flow, 5 years in terms of total return in the last 10 years. Growth estimate for next year is 7%, 5% after that. Fairly valued $139 per share is where they think the price should be. And finally, Hershey Company, one of the companies I do own. 40 billion market cap, wide economic moat, $194 per share. Dividend yield of almost 3%, which is quite nice. Payout ratio to 46%. Again, they have room to basically increase it, and they are increasing it by 15% latest, 10% in the last 10 years, 14 years of increasing that. $5.48 is what you will get. 93% safety, which is absolutely huge. Profit margin almost 17%, return on equity 50%, return on invested capital 26%, $1.5 billion of free cash flow. Total return in the last 10 years, we're looking at about 8%, and growth estimate next year 6%, 6% after that, 6% discounted, $208 per share is where the price should be according to them. So these are the 7 companies that I thought are worthy of mentioning. There's a lot more Sharia compliant companies out there. I didn't even do 10 because I genuinely couldn't find high quality businesses that are Sharia compliant, that are not too expensive. Also, I took out companies that I thought, of course, the situation with the occupied Palestine and so on, there were companies that support that side of things, so I took those ones out as well. So these are the ones that I know of, okay, that are Sharia compliant. Some people will say this, and Advi, for example, does a Botox and all of that stuff that's not included, but according to Zoya, is actually Sharia compliant, and I can show you this. Okay, again, I have no affiliation with Zoya. I just use that information and to help you guys. I have literally nothing to do with them. I just share that information with you guys because of course you deserve it, and I want to help you guys as much as I can. So there you have the 10 companies, all Sharia compliant, no issues. This one has a higher in terms of debt wise, so remember they're looking about 33% or 30% whatever, and they basically interest bearing debt, sorry. So other than that, there's no issues at all. So that's the 7 companies I wanted to share with you guys today. So a couple of more things before we finish the video. And as promised, these are the companies that they basically got rid of. So I was very basically interested to see what companies they've deleted from. So 23 companies were deleted. Remember, some of these are not Sharia compliant. So Broadcom was one of them. Basically Merck and automatic data processing. These 3 companies, I do own them in my portfolio. These I can imagine why these 2 have gone up, because they've gone up so much in the last few months, but they still meet that criteria. They said, maybe, I don't know, maybe the free cash flow. I have no idea why they got rid of. There are other companies, for example, Illinois Toolworks as well. 3M, I wouldn't be surprised that that's probably something to do with the dividend side of things. Williams Sonoma, again, maybe it's gone up so much. There are other companies, so I'm just looking at the ones that I know that are Sharia compliant 100%. But yeah, some other companies that I don't recognize, some mortgage companies and so on. So these are the companies they got rid of. But the top three here, and of course number 5 here, this is gone up so much as well. So that's probably something to do with. Now the new addition there, they've added actually out of the ones that we talked about today. Hershey is one of the new companies. They have included Skyworks Solutions as well. They've included, what else have they included that are Sharia compliant that I know of? This one is quite good, but has not done well over the last few years, so I just left out. I didn't want to include that. And yeah, so the rest of them seem some of the banks and insurances and whatever companies, but that's the companies they got rid of. These are the ones they've added, and it seems very interesting to see the fact that they've got rid of companies like Broadcom and Merck and automatic data processing, because I would think these are high quality business that meet the criteria, but maybe because they've gone up so much, that's probably why. Anyway, if you're enjoying this type of content, please do me a favor, just like the videos. If you don't want to do anything else, subscribe to the channel. That's perfect. If you can do even more, then join us here, where you basically pay 15p per day to have access to all the buys and sales and all the other dividend trackers, and of course to a community of brothers and sisters who are really sharing good practices. If we don't speak until Eid, Eid Mubarak to you and your family. Have a wonderful day. Assalamu Alaikum.